Hello everyone, good evenings. So this is Zach here from Seafood. Together with me is Dato Yu. So before we start, okay, just want to do a quick sound check. Okay, if you are here with me, appreciate if you can tell a one for me if my sound and screen is working. All right, and of course, do appreciate. Okay, if you can help me to click the like buttons, help us to share this out. Okay, so that we have more viewer for this section. Now, this section here is very interesting because we're gonna talk about a little bit of something is probably trending and hot right now, which is related to gold price. Okay, as we know, gold prices going into the all-time high. Okay, I think there are a few company in Malaysia that I think we should keep monitoring. Keep monitor, okay, and focus, which is I think popular one should be Tome, Pokong, and of course now today this section here we're going to talk about Aumas. Okay, I think among all the few gold related company Bursa, Aumas is the one that following very closely with the stock price, okay, of gold prices. Okay, so without further ado, okay, Dato Yu is here with me and he's going to share with you in more detail about Aumas, and later on I will come in to join Dato Yu as well to look into the overall market trend, okay, for Aumas. So Dato Yu, I'll pass the floor to you first.
Okay, let me. I've got some slide presentation, and what I'll do is I'll take you through the slides. Now, basically, I'm looking at the company from what I call a fundamental perspective. Okay, and to help me frame the issues, I'll be referring to the thing called the fundamental mapper, which basically maps business performance and investment risk. So the business performance is on the horizontal axis and the investment risk is on the vertical axis. And what the fundamental mapper does is break up the companies into 4 quadrants based on the risk and business performance profile. So I'll be using this as a format to help guide the discussions. Now, Aumas a decade ago was basically in what I call a aquaculture company. But when you look at them today, they are basically a gold mining company. In fact, they are currently the only gold mining company on Bursa Malaysia in terms of actually gold mine. They actually went into gold mine because they took over this company called Willendorf that had about 300 odd acres of mining land. Now, for those of you who are looking at the share price, they bought this company. That means the old Aumas bought this company for about 96 million ringgit in exchange for shares. And if you work it out, it comes about 96, 97 cents per share. So today, when you look at the listed company price, okay, it is about what the value of this gold mining rights that they bought for. So I leave it to you to see whether that's a cap or whether that's a downside. Okay. Now the company actually fully transitioned to gold in 2020. So in 2020, they basically sold off all the assets related to the aquaculture business to fully concentrate on what I call gold mining. Okay. And in line with that, they changed the name from what was known as Buffett Resources to Aumas Resources. Now, for those of you who don't remember, AU here is the chemical symbol for gold in your periodic table. And of course, if you look at mass, which is actually, I think the short form for a mass of gold. So I suspect that's how the name of Aumas comes about. So they went into gold mining and rebranded itself last year. Okay. And part of the reason for the rebranding was because the previous management got into trouble, and the MACC actually came in, did investigation because I think there was some issue over the way they declared the gold production. And because of that, big issue, there was a change in management both at the board level and at the senior management level. And I think because of that, the new management team took the opportunity to rebrand themselves, change the name, and so on. So because of this, when you look at the 2021 production figures and so on, there's always a question mark, how much is it true? Because the company did not actually specify whether they rectified the numbers or whether, they retrospectively rectified all the wrong reporting numbers. Okay, so it is hard to really tell. So when you look at the company from a track record perspective, you're actually looking at 21, 22, as more reliable data, than, let's say, the pre-21 period. Okay, so that's the basic background of the company. Now, in the fundamental mapper, okay, because they are the only gold production company, the fundamental mapper actually compares their performance with others in the original, what we call animal production sector. Okay, but even you leave that aside, okay, from where they are, Aumas is today one of the better. If you look at the TED companies within the sector, Aumas today is one of the better performing companies in terms of business fundamentals. Okay, we are not talking about market price yet. Okay, now when you look at the post 2021 performance, okay, you can see the uptrend in revenue. So the blue line are the revenue. You can see the uptrend in the profits. Okay, and when you dig a bit deeper, okay, you'll find out that this line here represents the gold production, the quantity of gold produced. And you find out that actually gold production actually dropped, okay, whereas revenue and profits increased. So the revenue increase, the profit increase is not due to production volume changes. Okay, that's the first message that I want to bring across. The second thing is that when you look at the production costs, okay, the production costs have not come down significantly. There's a slight decline. Okay, and again, the improving profit is not because there was better cost control. So when you look at the production volume and you look at the production cost, the thing that struck me was that they benefited from what I call the tailwind in the gold prices. So for example, if you look at 2024 to 2021, the gold price went up by 50%. So you can say that they were lucky, to be coming into the gold mining market right at the time when the gold price was actually going up, and they benefited from that tailwind. Okay, and to be fair to the company, they acknowledge it because, for example, from 2024 to 2023, they acknowledge that their selling price increased by 28%, which is a very significant increase compared to a lot of other sectors in Malaysia. So when you look at it from that perspective, the first question that came to mind was, are you investing in a business or as a standalone business, or are you actually investing in a gold proxy? Okay. Because if the business performance is so dependent on gold price, are you better off than investing in gold rather than in a company? Okay, that's the first thing that struck to mind, and I thought I wanted to share some differences between investing in gold and investing in what I call a gold mining company. Okay, and I look at it from 4 perspectives. You look at the risk, volatility, the return potential, and the cash flow. Now, if you are a risk taker, okay, then the gold mining company, because their business is dependent on gold, is probably much more volatile, okay, And because of that, it's going to be a higher risk compared to investing in gold. And if you're a person who like the high risk, then the potential to get better benefits, because the profits from the gold mining company would probably be a multiplier than gold. So the prospects of higher prices if gold prices shoot up is better than investing in gold. Of course, on the downside, if the gold price collapses, then the gold mining company is going to suffer more than your price of gold. The other advantage, of course, is when you invest in a company, there's always the possibility of dividends. Okay, whereas of course, gold has no intrinsic value. It actually, you buy because people buy and then the price goes up because of speculative forces rather than actually an intrinsic value of gold itself. So your first question and your first point of view would be, do you want to invest in gold, or are you actually investing in a gold mining company? Because if you're investing in the company because you think the gold price is going to go up, then you stand back and say, hey, what is my risk tolerance? And then decide whether you should bet on gold or bet on the gold mining company. First point, okay? Now, if you're a conservative investor, okay, and you are not sure about whether the gold price is going to continue higher or lower, then investing in gold will give you a better downside protection than investing in a gold mining company. Okay, so it is not just and the difference, because Zach mentioned earlier about Tomei and Pokong, the gold jewelers like Tomei and Pokong, the gold component of their retail business is only, it's not as significant as, let's say, a gold mining company. Okay, Pokong has diamonds, has silver, has all the other jewelries, and same as Tomei. So the impact of gold on these two jewelers are less than the impact of gold on a pure gold mining company. Now, to be fair to Aumas, they also produce silver as a byproduct, because in the normal production process, gold and silver tend to be found together, but the proportion of gold and silver in the case of Aumas is very small. So even though they say they produce gold and silver, the major price that you look at is actually gold rather than silver, because silver is actually only a small component of their revenue. Okay. Now, if you are going to look at Aumas as a business, okay, and you say, I'm going to invest in this gold mining company, what are the things that you should look for? Well, I think there are 4 areas that we look for. You look at the growth path, look at how other gold mining companies are performing, look at where they are from a financial perspective, and of course, I'll cover about what's the business value of this company relative to the market price. So let me go a bit more into each of these 4 business areas. Now, there are several growth paths that Aumas could take. For example, they could increase their production volume. Okay, that would give them hopefully a higher revenue, even if the gold price don't change. If they improve their production efficiency, then they will help to improve the earnings, even if revenue doesn't change. And of course, they could look for new mining sites. Okay, there are currently gold mining companies operating in, I think, Pahang and some of the East Coast states. So I'm not sure whether they have started or mine gold in a big way yet, but there are sites in Malaysia that historically had gold. I'm not sure how many of you, okay, if you're not old enough, you see, when I was younger, in history, when we learn about history of the Malay Peninsula, I'm not sure whether how many remember. It was called the Golden I think it was called Cheronis, okay? Because pre-British time, Malaya was known for gold. So there are actually gold deposits in the country. Okay? But I guess that as over the years and over the decades, a lot of the gold mining areas have been depleted. So looking for new mining sites is not really a wild dream, because there are still some gold sites. But whether it would be a big site, that's the unknown question. And of course, the company has talked about ESG, and I'll talk a bit more about ESG and how some of the ESG things that they're doing can also give them a revenue and earnings growth path. Let's go a bit more into some of the growth path. So let's talk about the production volume. Okay. Now, the company has announced plans to increase its production capacity by 200%. So even if, let's say, the gold price remain stable and don't change, in theory, and assuming that there's a demand for the products, you can see them doubling their revenue, okay, over the next couple of years with pure volume increase. Okay, so they can produce more, assuming that the demand is there, they can sell more, then the revenue will go up. So that's one growth path. The other one is, of course, the efficiency path. And to be fair to the company, last year they reported better extraction rate. That means when they mine for gold and they convert the ore into gold, they got more gold per kilogram of ore in 2024 compared to 2023. Now, if they can improve their production techniques and so on, and get a better extraction rate, then we can see, even if the mining volume remains the same, they can get more gold converted. Again, that will give them a better revenue and earnings path. So that's one path that is possible for the company. Now, the company in its annual report said that they are talking to people to pursue joint ventures and so on, and to look at other gold mining sites. Again, not sure how much is practical, because if there are gold on my land, the question would be, why would people form a joint venture and not try to do it themselves, especially if they are currently mining gold for themselves? Okay, so whether this is a practical growth path for the company over the next couple of years may not be as clear as the volume production and efficiency improvement. Now, the other thing that looks positive is that the site where they are is actually in the middle of nowhere. Okay, and because of that, they have to use diesel generator power for their processing plant. And I think that there are plans to see whether they can replace some of their diesel power generated electricity with solar power. Now, if they can do that and they can scale it up, I think there is a opportunity to reduce the production cost. So the issue is not about environmental compliance. It's actually right to the bottom line. I think they can get some benefits to the bottom line. Of course, to be fair to the company, they are also talking about ESG in terms of the mining waste and so on. And I think that if they can focus a bit more on the ESG, especially in the context of reducing waste or improving their efficiency and conversion efficiency and so on, we will see the impact on the bottom line. So the ESG is not compliance. I'm looking for ESG from a pure profitability perspective. Now, the company has been very bullish in its annual reports, talk about, the gold production price going up. Okay, and if you look at the gold chart, it actually has been going up. Okay, and the chart on the right here, I have actually tabulated the global demand, which is shown in blue, and the global supply, which is shown in dark brown. Okay. I want you to look at the 4 years gap between the supply and demand. Okay. And then make your own judgment on whether the price increase is because there is a shortage of gold or whether it is due to other speculative and other forces. Okay. Because if it is because there is a real shortage of gold, that means the demand is going up so much that the supply is not enough, then I think gold prices will hold. But if you look at it and you say, hey, the gap between the supply and demand have not, it's not like, here in 2020, if there's no big gap, then the question you got to ask yourself is the gold increase sustainable then? Okay. That's a question that you ask because for a gold mining company, the gold price affects their profitability. So if you think that gold price is going to collapse, okay, like here, collapse, then you can see you have a good picture of their revenue and profit trend. But of course, if gold price continues to go up, then you would have missed an opportunity if you do not invest in a gold mining company. So it goes back to not just looking at what I call the production efficiency and the conversion capability of the company, but also a big part on the external factors. What is driving gold prices? Because it is not, when you look at it, 2324, the gap between the supply and demand has not grown bigger, but prices are increasing. Okay, so I'm not sure whether any economists can give it a good picture or not, but it's something that you have to judge for yourself, okay, and decide whether this price is sustainable or not, because it has an impact on your decision to invest in a gold mining company. Now, when you look at Aumas as a business, okay, one of the things that you look at is the returns. And when you look at the returns, I like to compare it, I like to benchmark it, I think that's what they use, with other global gold mining companies. So these are four what I call world largest gold mining company having the same sort of operations. That means what I call the ore mining type of operations, okay, like what Aumas does. Okay, they dig for the ore, they separate the ore, through a chemical process. Okay, and when you look at this is a trend of gold price, 22, 23, gold price are going up. When you look at the returns of the gold mining company, you don't see, yes, they have gone up, but it is not the growth, there's a limit to the growth, I think is the word I've used. Okay, so they are doing around 8 to 10% return on capital. Okay, so the question you got to ask yourself is, Aumas did 14%, they did low, they did high. Is it able to do 20%? Okay, if the global gold mining companies who have in this business for the past 20 to 30 years, okay, at the peak of the 24 gold prices, there's only 10 to below 10%, okay, return on capital. When you look at Aumas return, you must then understand there is a limit on how high it can go, okay, over the long term, okay, because over the long term, the gold mining companies' efficiency and their marketing expertise all determines their return. Okay, Aumas may have benefited from an initial startup position from zero to growing, okay, but if you're trying to say, are they going to be the business for the next 10 to 12 years? How high or what is going to be the average return? I don't think you can ignore the performance of the global gold companies. Okay. So this is a cap for those of you who are very bullish and say, they can continue to increase their return, and because of that, the share price will go up. Okay? Look at this as one realistic factor, okay, constraining how much they can grow. Okay? Because for you to expand capacity, you need to build plants. If you need big plants, you need additional capital. So you can. This is not like it's not like the AI companies where you can create more volume without additional investment. Okay, hardware. These are brick and mortar companies. So today, if they're going to double their capacity, you can imagine requiring additional capital. If next year they want to build additional plant, money has to come from somewhere. Now, to be fair to the company, I'm not sure how many of you recognize, they went to the market and raised about 200 million, I think 1 or 2 years ago. Okay, so I suspect that this 1 or 200 million, that the current cash that they have has been earmarked for the current expansion. So as far as expanding and doubling the capacity, for example, I think they have enough capital. But if they are going to, let's say, grow bigger, I suspect they will probably have to either go back to the market and raise more capital, okay, or borrow more. Okay. But my main point is that there is a limit to the return that they can achieve. Okay. Don't expect them to reach 20%. Okay. I would be happy if they can target around 10 to 12%. Okay. In line with what the global gold mining companies are delivering. Okay. So we know that this is a company that has growth potential. Okay. We know that it is a 5-year-old mining company. The good sign is that from a financial perspective, it is currently fundamentally sound. Okay, if you look at the debt equity ratio, it's a very, very low borrowings. I've mentioned that over the past 1 to 2 years, they risk money for investment, and a lot of it is still tied up in cash. But I suspect this cash would come down over the next few years as they spend it on their plant expansion. The good point is that it is a cash cow. The business generates a lot of cash because of their revenue profile. So a lot of the revenue, profits, and so on are converted to cash. And the other thing I noticed is that they have what I call a low reinvestment rate. Manufacturing companies, for example, generally reinvest about 30 to 40% of their profits back into the business. So even though a company makes 100 million, for example, you cannot expect them to distribute 100 million out as dividends to shareholders, because the company will probably have to give back 30 to 40 million to reinvest in new plant expansion, replace machinery and so on. Now, in the case of Aumas, although they don't have a very long operating history, they have a reinvestment rate at the moment that actually looks very low. Okay, it's about less than 10%, and I suspect that this could be due to its history. Okay? And over the next couple of years, I suspect that the reinvestment rate will go up. But again, it is not 70, 80%. So I suspect that even as they reach a steady state, a lot of the profits generated can be distributed back to the shareholders. Okay, so that's why I think that I wouldn't worry about them from a financial perspective now. For them, the main worry is, can the business be sustained? So when you look at the company, okay, from the risk invest perspective, the fundamental mapper, okay, maps companies on the risk from low to high here, and you can see that it is actually mapping them as one of the higher risk company now. Okay, now let me share some thoughts on this risk profile. It is a mining company, okay. And for mining companies, I was looking through the annual report to look for the information, and they have not been. I couldn't find the information. But the most important information for a mining company is how long the gold reserve will last. If it can last for 100 years, then we will laugh. If it can last only 3 years, then you're in trouble, okay, if you don't find new mining land. I'm going to be cynical and say that I don't think their gold reserves are 50 years, because if it lasts very long, they would have talked about it. I worry, okay, I don't have proof of that. I worry that the reason they are not mentioning of the gold reserve is it's not so big. And I suspect that they may worry that if they actually talk about how much gold reserve they have, it would impact the investors' confidence. Again, it is speculation on my part, but the biggest challenge for mining companies is how much will the gold reserve last. Now, for those of you, okay, I'm going to sidetrack a bit, who have seen the news on Petronas, the Malaysian oil reserves will probably have another 20 to 30 more years to go if we don't find any new gold reserves. Okay, so there is a finite life to the oil reserve. There is going to be a finite life to the gold reserve. For most of you, you're probably too young to remember that in the 60s, when I was young, Malaysia was the biggest tin mining country in the world. Okay? Biggest tin producer. And when I was studying, going into what I call metallurgical engineering was the way, one growth path, because people say, wow, the tin mining industry is the big one. Okay. Look at the tin mining industry today, gone. Okay. Because natural resources have a finite life. So the biggest question I have on Aumas is, how long is the current gold reserves going to last? And I couldn't find any information for that. I'm very sure that the company has that information, because they would not go and dig for gold without some geologists doing some surveys and giving them some estimates. Okay. The lack of information is a red flag now. I'm not sure whether it is a fair question or fair issues or not, but it's definitely a red flag. Now, having said that, to be fair, over the past year or two and so on, this, for example, comparing 2024, 2023, they have experienced gold price, they have managed to reduce the cost, so that over the short term, mid to short term, okay, sorry, in immediate to short term, I think their revenue track and probably even their earnings track would probably be there. Okay, the question is, will it be there in 10 years time or 20 years time? It's a long-term one that I worry, because from a fundamental investor, okay, if you are valuing a company, then you have to look at it from the long term and look at it over the next 1 or 2 years. Fundamentals are not going to help you answer the questions over the next 1 or 2 years. That one, I will leave it to Zach to share his technical analysis with that. So what I've done was that I look at the company from an overall perspective, assuming that the next couple of years will be good. I assume that its return would eventually match those of the global mining companies. And I did what I call an intrinsic value. Basically, I projected the earnings over the next couple of years, and then I calculated what's the business, what's the earnings to the company, okay, and discounted back to the present value, and I got what I call a business value that's today lower than the market price. Okay, so that's one perspective. And to be transparent, I assume that there is no change to the gold price. That means the volume growth, the revenue growth, all comes from volume growth. The increase in profitability comes from revenue growth, comes from lower production costs, I assume that the current market price is the long-term price of gold. Okay. So if you are a bit more bullish and think that gold price will go up by not 10, 20% over the next 10 years, then you'll find out that, hey, the business value will be different. Okay. So to be fair and to be transparent, all valuations are based on assumptions. I'm a conservative investor, and I'm saying let's not all be bullish. Let's take a conservative estimate and see whether there is what I call a margin of safety from a conservative perspective. Unfortunately, there's none. So when you look and step back and look at it, I would say Aumas is a new gold mining company that benefited from the rising gold prices. It is financially sound, and it has a reasonable growth path. Okay. The negative side is that my estimate of the market price puts it lower than, my estimate of the business value, okay, results in a value that's lower than the current market price. And the real unknown is, I've assumed that the gold price remains the same. What happens if the gold prices over the past 1 to 2 years were driven by speculation and it's going to collapse? Okay, so that's the risk part. Now, because of that, I think when you look at Aumas as investment, my key point is still valid. Are you investing in a gold proxy, or should you invest directly in gold? Okay. Because the whole business of the company is tied to gold prices. Okay. So if you are very bullish on gold prices and so on, then I think the gold price volatility would help push the profits of the company. Okay. But if you have a more conservative view of gold prices, then I'm not sure whether investing in a gold proxy is better off than investing in gold. So that's basically my take. Like I said, from a disclaimer perspective, it is an educational perspective. I'm sharing with you the various look at analysis from a business perspective. Okay. And for those of you who wants to find more investment type of companies available and so on, get it on the Seafood app. Okay. So that's all there is on what I want to talk about on Aumas. I'll be happy to answer any questions you may have, or you want to wait and see what Zach tells you about the short-term view. Okay. Like I said, my fundamental investing comes from a long-term view. When I buy companies, I hold it for 5 to 8 years. Okay. And many a times when I buy the company, the price goes down after I bought it. Okay. So it is a view for those who have a long-term investing perspective and for those who are patient. Okay. But if you want to see what happens to the market price next week or next month, then don't look at fundamentals. Look at business from a technical look at it from a technical perspective. Yeah, TA will give you a better picture than fundamental analysis.
Thank you, Dato. Okay, now, before I take over Dato's this presentation over here. Okay, again, first of all, thank you for sharing us, Dato. Okay, something very interesting, especially on the return of capital parts, right? So now we know that for the past 3 years, even compared to other companies, right, seems like they are around 10% or below slightly. So this is something that I think we should take note, especially for those that who want to invest in long terms. Now, for the audience over here, do you have any questions, okay, regarding Aumas, or maybe something related to Aumas, okay, to Dato? Okay, you can actually comments below before we go into the technical analysis part. Okay, you can comment below if you got any questions regarding Aumas, or maybe if you want to know more about fundamental analysis, fundamental mapper in seafood apps. You can actually comment below. Then we'll ask Dato to help us to answer the questions. Okay, if let's say there's no questions for Dato, then probably Dato will take over from here.
Yep. Before you take over,
Hmm.
okay, I'm going to be very cynical. If you're
Okay.
going to, if you all are thinking of investing in a gold proxy, okay, then the question is why a Bursa gold company and not uh, the world best gold company? Lah? Think about it. Okay, think of it. Okay, because if you're inside, because whether your gold proxy is in Malaysia or Australia or America and
Hmm.
so on, then your question is, if you're going to invest in gold proxy, shouldn't you look at the best gold proxy? Okay, cynical.
Okay, Dato, any good gold company outside of Malaysia that you can probably share one or two with us?
Well, the peer I've shown you is actually some of the top gold mining companies. I think is what I've used. Yeah.
Oh,
Okay, they
the
have a
one
long
that you just
history.
now do comparisons
Yep.
one, right?
Yeah. Yeah.
Okay,
Yeah.
okay, great.
Go back
So
to the
probably
slides.
later on,
Yeah.
we have to go back to the slide and watch again, huh?
Okay.
Okay, thank you, Dato. Oh, okay, Dato, any other things you want to share with audience before I take over?
Nope. For those of you who are interested, in my
Hmm.
blog, I wrote a blog 2 years ago. I actually look at my question was whether are you better off investing in gold or gold proxy. At that time, when I was writing it, Bahamas was not big into gold yet, and I was looking at comparing gold with the gold jewelers. Have a look at my blog if you're interested to see how the gold jewelers compared to gold. But that's 2 years old, unfortunately. I
Okay.
haven't done an
Okay.
update.
Okay. Thank you, Dato. So once again, thank you, Dato, for the sharing sections this evening. Okay, right now we will go into the technical analysis. We look into the Almas, probably just a quick one, few minutes. So Dato, I will share my screen from here.
Okay.
Okay, so hopefully you can see my screen. Okay, let's go into Almas. If you got any question, you can type it um, at the comment section. Okay, I'm happy to probably answer one or two questions. So okay, now probably we go into the weekly chart first. Okay. Okay, we go into the weekly chart first. Okay, now this is the weekly chart of Almas. Okay, I think overall they're actually following very closely, especially on this part over here on the gold prices. So if you look into the overall market stages, this is going back to this is 2013. So actually break this so-called a long-term resistance. Okay, at around 70 cents. So uh, a long-term accumulations over here over this part over here is between around 30 cents to 70 cents range. Okay, breaking above with increasing volume, I think this is some of the good sign that we can take. Okay, but again, I think I just now the top mentions right. Technical parts, okay, we look for somewhere around like immediate to probably short to mid terms range. Okay, so going back to daily, at least we know that okay, based on weekly chart over here, trend still good. Okay, it just break, not to say just break lah, but recently it break above the 70 cent range. Okay, which is the previous main resistance. Okay, so if you look into this so-called the daily charts over here, okay, looks interesting. Okay, few thing is that now if you, for those that who are not familiar with our chart, is that whenever we got this triangle arrow is actually also representing there's a short-term strength, okay, coming in from the chart. Okay, of course B is the so-called the insider buying that we actually plot into our chart here, so it's easy for our so-called user, okay, to understand what is going on, okay, on the background. So if you notice over here, right, let me zoom in now so we can see better. Actually pretty interesting. Okay, over this range, right, notice this so-called the short-term accumulation range, right, we actually got lots of so-called insider buying happenings over here. Like for example, this is from Dr. Chong Meifa. Okay, I'm not sure who is them, but you can check that out. So you can see that they're actually acquiring, okay, the stocks, okay, of Aumas over here. Probably is from the insider or director itself. Okay, so this is Mr. Chong Zi Keng. Okay, of course, recently just acquired. So once they acquired, okay, the stock prices started to move it up. Okay, like I said, green arrow pointing up represent their strength. Overall, I kind of like the chart setups over here. Weekly chart is trending, and then of course on the daily chart basis, looks like they are supported well above the accumulation zone again, so it's somewhere around here. Now of course the little tricky part is that of course right now they are actually trading very close to resistance. So again, if you are using X chart over here, we actually have this so-called build trading plan for you to follow. Okay, so unfortunately they are actually slightly close with the current resistance. Okay, somewhere around here, this is a pure resistance range. Okay, so that your risk to reward probably is not the ideal. Okay, now best one for me is that they're able to pull back later on. Okay, actually I also aiming Aumas. Okay, again, a quick disclaimer over here. How this section here, we are not doing any buy and sell call. Okay, so if you want to trade any stock based on our discussion this evening, make sure you go on trading plan. Okay, so that's why I always have my this so-called support resistance in place. Okay, I try to buy very close to my support. Okay, to enhance my risk to reward ratio. If let's say it drop below, too bad. Okay, I just exit with a small losses. Okay, so this is parts of doing short-term or mid-term trading. Okay, so like I say, overall, I think the setup by is nice. I kind of like the how actually lots of so-called the B over here, the insider buying activities is going on somewhere around this range. Okay, let's see how it goes tomorrow or maybe next week. Okay, I hope that I can get slightly over low price a bit. Break above R1 would be good. Okay, I think there's a good potential to see there's a somehow like a continuation of the trend overall for Almas here. Okay, now any questions regarding Almas? Okay, do let me know. Okay, before we end our section this evening. Okay, hopefully our section over here provide you so-called the useful information. Okay, regarding not only Almas but also overall or the gold market or probably others gold mining company as well. Okay. Okay. Let me just. Okay. If let's say no questions. Okay. Okay. Dato, you still here?
Yep.
Okay. Dato, any last words before we end our section this evening?
Well, make money. Oh.
Okay. Yeah. Okay. So with this, once again, thank you for joining us this evening. We have another section again 2 weeks from now. Of course, covering different companies, okay, with some of the hot team and stocks to watch out for. Okay, if you got any specific stocks that or sector that you want us to cover, feel free to PM us. You got my Telegram. If you're in my Telegram group, just let us know. Then we will probably do a cover, okay, in our upcoming section. All right. So with this, once again, thank you, Dato, for joining us, and thank you everyone, and good night.
Okay, good night.
Thank you, Dato.
Okay.